It's increasingly difficult to mine Bitcoin. Can the growth of hash rate cover the pressure from increasing difficulty? The market expects Bitcoin to reach 200,000 US dollar a year later. Are the current difficulty and halving still important? SEC and CFTC differ on whether Ethereum is a commodity or security. Where will the hammer fall? Binance wields the knife, cutting ties with Tron's USDC. Can Tron escape the heavy blow of US regulation? Killing his own son, BRC-20 inscriptions protocol. Casey Rodarmore strongly supports his younger son, Runes. Runes gonna take over? New gameplay ignites player passion. Can Pixelman shed its label as the worst NFT project ever? We shape the world using the power of crypto one step at a time. Do you want to uncover the secret of digital wealth? Let's grow our bank balance together. Guys, today is March 27th, Wednesday, so where are the coins and chains? I'm Zoo, and this is DeepCoin sponsored headlines. Funds were at net outflows last week, but the trend has reversed again this week with 2 consecutive days of net inflows. Yesterday, spot Bitcoin ETFs had a net inflow of 418 million US dollar, and the inflows are continuing. With Bitcoin rebounding above 70,000 US dollar, its market cap has also returned to 1.38 trillion. Bitcoin's market dominance has basically remained stable at a high level of 52%. Although altcoins have rebounded significantly in the past 2 days, they have still not effectively shaken Bitcoin's dominance. Bitcoin remains dominant, and subsequent market movements will still follow Bitcoin's. The return of funds and attention to Bitcoin will be more conducive to accumulation and eventual price breakout. Overall, miners' reserves have continued a slight net outflow trend, but the average daily outflow has been relatively small. It's generally negatively correlated with Bitcoin's price. In the past month, miners' reserves have declined from 1.812 million BTC to 1.806 million BTC, with an outflow of 6,000 BTC, posing relatively little selling pressure on the market. Under the excess profits Bitcoin at historical highs, the miners' daily selling and slight outflow are reasonable, and the market can effectively absorb this low price supply. From the overall perspective of miners' reserves, most miners are now diamond hands. The market expects the next bull market to bring a 3.5 time increase for Bitcoin, meaning Bitcoin will reach 200,000 US dollar a year from now. Doesn't that sound enticing? As Bitcoin's next halving approaches, mining difficulty has also been rising continuously. So in the past month, mining difficulty has risen from 351 Z hash to 360 Z hash per second, an increase of 2.8%. If miners' costs remain unchanged, this means mining revenue has decreased by 2.8% over the past month. Despite the increasing difficulty and imminent halving, hash rate has instead continued to surge. In the past month, the mean hash rate interval has risen to 570 e-hash per second to 630 e-hash per second, an increase of 10.5%, far exceeding the rise in mining difficulty. Everyone is ramping up efforts to mine Bitcoins. Mining will inevitably be one of the most comfortable DCA methods in the next bull market. While others are DCAing to lower their average cost, miners can DCA at even lower prices. Isn't this the charm of cyclical stable investing? The key to igniting the next bull market is undoubtedly the Ethereum spot ETF that's expected to be approved in May. So many Wall Street financial giants have already started positioning themselves, ready to grab the first slice of the pie brought by the Ethereum spot ETF. Ethereum spot ETF faces a big challenge before being approved, which is the fundamental question of whether Ethereum is a commodity or security. If this question is not resolved, Ethereum spot ETF could be indefinitely delayed. So now, the two authorities, US regulatory bodies, CFTC and SEC, are not only vying for crypto regulatory power, but also have differing views on whether Ethereum is a commodity or security.
Recently, Legislators, including the chair of the House Financial Services Committee and the chair of the House Agriculture Committee, wrote to SEC Chairman Gary Gensler seeking clarification on the SEC's stance on Ethereum and the regulatory classification of Ethereum. According to the legislators, this statement contradicts the Commodity Futures Trading Commission's CFTC position of considering Ethereum as a non-securities digital asset within its regulatory purview. This misalignment arises as the CFTC has already categorized many cryptocurrencies like Bitcoin and Ethereum as commodities, while the SEC has been intending to classify Ethereum as a security. Some experts suggest that this stance could lead to the committee refusing to approve Ethereum spot ETFs.
It's been more toned from the top. It has been up to the respective chairs of the two agencies and the commissioners on the agencies over the course of the last 40 years to determine whether they'll work together, whether they won't.
The biggest conflict between CFTC and SEC is who gets to regulate the cryptocurrency market. So everyone saw SEC's nearly $5 billion enforcement revenue from the crypto market last year. This is not just about power struggles, but also about interests. This is not a small matter to be resolved over a meal, right? So there are also complexities of democracy, bipartisan politics, federal and state power, struggles, checks, and balances, actually. So we won't comment on the politics. We just hope that on this issue of defining Ethereum, US regulators will act decisively, regardless of the outcome. That would at least be better than the current ambiguity. I think there's no problem with calling Tron founder Justin some bold and avant-garde, but most in the crypto world, we probably agree that he's shameless. In March last year, SEC sued Justin Sun and Tron, alleging illegal securities offerings, fraud, and market manipulation. Sun responded with a 3-day tweet storm, claiming the charges lacked evidence. So the case is still unresolved. So recently, Sun has encountered another setback, this time from Tron's former ally, Binance. What exactly led Binance to wield a knife and cut ties with Tron's USDC?
Binance recently announced that it will halt the deposit and withdrawal services for the USD stablecoin USDC on the Tron blockchain starting from April 5th at 10. This decision comes as the Circle team ceased support for TRC20-based USDC tokens. Meanwhile, Circle emphasized that since February 2023, they have not provided services to Justin Sun or any entities owned or controlled by him, including the Tron Foundation or HTX. Circle did not explicitly state the reason for discontinuing support for the Tron blockchain, only mentioning that it's part of their risk management.
The root of the storm can be traced back to Circle's decision in February to gradually stop supporting USDC on the Tron chain. At the time, Circle did not clearly state the reason, only vaguely citing risk management reason. However, there were rumors that this was related to Tron being listed by the US and Israel as a blockchain used by terrorist organizations for fundraising. Against this backdrop, Binance's decision to stop supporting USDC on the Tron chain is undoubtedly a major blow to Tron. As an upcoming stablecoin, USDC's compliance has always been closely watched by the market. Compared to the older stablecoins like USDT, USDC is seen as more compliant. JP Morgan analysts even expect USDC to gain more market share in the future. Binance's move to abandon USDC on the Tron chain may be to appease regulators and enhance its own compliance. With this background, the community can't help but speculate whether the notorious anti-crypto SEC or even the anti-money laundering Department of Justice could launch further regulatory crackdown on Tron. Market cap below $1 billion and he'll commit seppuku. Founder Casey Rodemore is really going all in. Fragmenting NFT IP, can a Pixelman NFT project break out of its cocoon and transform? With the birth of BRC20, the Bitcoin ecosystem has ushered in the era of the Ordinal's inscription protocol. After the first BRC20 token ORD was listed on Binance, it surged nearly 2,000 times. At the same time, the success of Ordinals has also drawn criticism, with some developers even arguing that inscriptions are a Bitcoin vulnerability that needs to be patched. In response, Ordinals creator Casey Rodemore launched the improved Runes protocol last September as an alternative asset insurance solution that he claims is better and more lightweight than the BRC20 protocol. Let's take a look.
I'm back with the rap and I've got a special feature. There's a new place for you to go to store your data on Bitcoin thanks to Casey Rodemore. He's our guest and we'll just break down the topic. Is it good or bad? Will fees be rad? Can you even stop it? Do inscriptions conflict with the mission or the vision? Or are ordinals additive to the overall system? You decide while I ride on this crazy Game Boy beat. I deign to speak and let the words drip and creep. There's a dispute to inspect, some loot to collect.
Earlier, Casey Rodemore announced that the Runes mainnet would launch at the timing of Bitcoin's latest halving. Just yesterday, he went further to boldly claim that the market cap of Runes would surpass $1 billion in the first month after launch. Otherwise, he would commit seppuku. Casey Rodemore believes that if the protocol has a small on-chain footprint and promotes trustworthy UTXO management, it may reduce harm compared to existing Bitcoin FT protocols. At least, the popularity of BRC20 has already generated a significant amount of junk UTXO.
So this bold claim not only showcases Casey Rodemore's confidence in the Runes protocol, but also reflects the intense competition and constant innovation in the Bitcoin world. So after all, in the vast ocean of digital currencies, every new protocol and idea could become a trendsetter. So will the upstart Runes protocol allow Casey Rodemore to fulfill his artistic dreams? So we are also eager to see if Runes fails to reach a $1 billion market cap in its first month after mainnet launch. Will he really commit seppuku as he claimed? In the gaming world, the most well-known game is Palu World. In GameFi, the decentralized game Pixelmon has attracted attention for its pet designs that closely resemble Palu. However, the similarly hyped game actually arose from a torrent of criticism. Pixelmon is a role-playing game and NFT collection that allows players to create, train, trade, and battle with digital monsters in a virtual universe. Although the Pixelmon NFT project completed an 8 million seed round in February, it was mocked by the community for its poor character quality. Just when everyone thought Pixelmon had become a joke, it came up with the idea of fragmented NFT IP, allowing players to enjoy a game while also earning royalty income, a brilliant move that turned the game around.
Giulio Exeloianis, CEO of Pixelmon, stated that they plan to introduce a fragmented NFT IP system, allowing NFT holders to receive royalties when their characters are used outside the game. It is reported that the royalties for Pixelmon NFT holders will be distributed to the native Mon token of the Mon protocol. Meanwhile, trading volume and transaction count have grown by 88% and 74%, respectively, within a week, while the floor price is currently at 1.875 Ethereum.
But what I had to do was essentially flip the equation. I had to go from failed on execution to this needs to be the most trusted project in Web3 on execution standpoint. So what you want to deliver on and over-deliver on is execution, then the key word to execution is not hype, it's not big deliveries, it's not one big thing, one big action, it's consistency.
Additionally, Pixelmon announced it will introduce a free-to-play mechanism, which has not only attracted many players, but also promoted the popularization and royalty income growth of the fragmented NFT IP system, contrasting sharply with other paid Web3 games. So are there any risks with Pixelmon's so-called fragmented NFT IP system? Certain characters may go unnoticed due to lack of popularity, impacting players' royalty income. But Pixelman says as long as the game itself is popular with players, this risk can be effectively controlled. Pixelman's story tells us that even in the face of mockery and doubt, innovation and courage can lead to rebirth. So now, Pixelman NFT trading volume is continuing to grow, and floor prices are soaring, with the ridicule of the past turning into awe and anticipation. Let's wait and see if Pixelman can go further down the road of fragmented NFT IP.
According to Yahoo Finance data, MicroStrategy's stock price surged past $1,870 yesterday, closing at $1,876.99, reaching a historic high. The current market capitalization stands at $31.67 billion, with a year-to-date increase of 173.95%. Data reveals that the amount of SHIB held by exchanges has dropped to its lowest level since March 2022. This highlights bullish sentiment among SHIB investors, as the decrease in exchange supply inevitably suggests these investors are opting for long-term holdings rather than immediate selling of their positions. Market data indicates that the gas usage on the base chain has reached 5,616.1738 Ethereum, with an average gas cost of approximately $0.1201. The total number of blocks has reached 12.3 million. El Salvador currently holds 5,700 bitcoins. It is reported that El Salvador's bitcoin holdings were approximately 5,690 bitcoins in mid-March this year, calculated at the current slightly above $70,000 price of bitcoin. El Salvador's bitcoin holdings are valued at over $400 million. On March 26th, 9 spot Bitcoin ETFs, including Grayscale, added 2,637 Bitcoin to their holdings, with a net inflow of approximately $183.7 million.
Some traders often have thoughts like, so this opportunity is too good. It's such a pity not to have seized it. I closed out too early. Only if I had held on longer, I could have made double the profits. If only I had cut losses sooner, I wouldn't have lost so much. It's just like being in a relationship, constantly worrying whether she loves me or not, whether she's thinking of me, whether she's with someone else. Actually, the trading market is vast, with over 1,000 cryptocurrencies and countless opportunities. As traders, we're like mice that have fallen into a rice barrel. It's dazzling, and we can't help but want to devour all the rice at once, ending up bursting ourselves. The more tempting and extreme the environment, the more we need to be clear about our goals and focus on what's important. No matter how much profit there is, if you don't actually make it, it's irrelevant to you. Only profits secured in your hands are truly yours. Okay, so that was the main content of today's program. If you find our channel helpful, please feel free to share and follow us. You can also become a member by clicking the top right corner to see our membership benefits. Our channel focuses on curating valuable news from the crypto, blockchain, and mining industry. Monday to Friday, we have news updates, while Saturday and Sunday feature in-depth special reports. You can access our Monday to Friday wealth insights and articles by our specialized authors. Let's slowly get rich together. See you tomorrow.